What is going on, everybody? Welcome into another edition of the Daily Energy Newsbeat stand-up here on this gorgeous Thursday, December 15th, 2022. As always, I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, energynewsbeat.com, Stuart Turley. My man, how we doing today?
Yeah, it's a beautiful day in the neighborhood, and there's a lot of news out there, dude.
There is a lot of news out there. There was a lot of news yesterday, too, and quite honestly, I thought we had our best show ever. I'm not kidding. I think yesterday was the best show we've ever done, and somebody forgot to hit record. That somebody is unfortunately me. So we apologize for not putting out anything this morning. We didn't catch it really until it was too late and just kind of decided, well, that show's for the books. It unfortunately was the greatest show we've ever done. So only Stu and I will ever get to listen to it. But we are back on the grind today, as always, and we appreciate you joining. And as Stu mentioned, man, we have some great stories lined up. Stu's going to start us off domestically talking about why permitting reform could help the U.S. energy industry. I'm going to go out on a limb and say will help the U.S. energy industry, but we'll let Stu either convince me otherwise. Then we'll fly over to China. Looks like air travel demand is going to soar as COVID-0 eases, which might translate into huge demand for jet fuel and oil. Too bad. If only the supply chains were good enough to handle that. So Stu will talk about all of that. Then we'll come back here domestically and talk about how Ohio is trying to introduce a bill that labels natural gas as green. I didn't see that one coming. And it's motivated by ESG concerns. So if you didn't see natural gas coming in as green, watch out, because that's coming. We'll talk a little bit about fusion. We did talk about that extensively yesterday, so we'd be remiss if we didn't cover it again today, considering yesterday's show was for the wind. Scientists have made a major breakthrough in fusion, but as Stu will tell us, don't get carried away. And finally, Jim Cramer has some stock picks for oil and gas. I know we will be waiting. I know I'm waiting at bated breath in order to short all three of these stocks. So I can't wait to see what stocks we should all short. Stu will then kick it over to me. We will cover what happened in the markets today. As I'm sure everybody saw, we did see a 50 basis points increase. Markets didn't react kindly, if only because the expectation of capping the federal funds rate at 5.1 in quarter one of 2023 was basically brushed off, and they said they're going to blow through it. So that's why you saw markets down today. Crude oil, even though we had some absolutely insane EIA numbers to follow some insane API numbers the day before. We will cover what happened in oil prices, currently trading about 77.26. Natural gas, just a slow and steady decline today. We started out over $7, currently trading about $6.48 as we record this the night before. We will cover all of that in a bag of chips, Stu. But first, guys, check us out online, www.energynewsbeat.com. I'm not exaggerating when I say it's the world's greatest website. All of the information that we're covering, all of the stories, all of the analysis that we've done is found at that website. Stu does a great job of curating it, and it truly is the best energy holistic website out there for all things energy, oil and gas, renewables, hydro, whatever you want to throw it under the bucket of energy. We've got it covered. Enough of the pleasantries, though, Stu. Where would you like to begin?
Let's start with some fusion. I get tickled at this. Back in 1977, I wrote a high school paper on fusion nuclear.
Did you say 1917?
1977.
No, oh, 19. Oh, okay. I thought you said it would have made the 17 makes more sense.
Well, yeah, Moses and I are buddies. But when we take a look at the article, it's titled, "Scientists May Have Made a Breakthrough in Fusion, but Don't Get Carried Away." The author of this one comes up and says, "I'm going to go out on a limb with a year-end prediction. The old joke in the physics community is still, fusion is always 50 years away." Michael, I think you brought it up correctly. Why is the DOE announcing this now? And fusion is when you're putting the atoms together to get out the hydrogen and then cause the reaction, and you're actually not going to have any radioactivity waste. So fusion is the mecca of energy. It is where you want to go.
Fission, I think it's helpful, Stu, to talk a little bit about what what happened? So as I'm sure you guys are aware, the Department of Energy's Lawrence Livermore National Laboratory, known as the LLNI, came out with basically a statement from the Department of Energy that said they have achieved the first energy positive collision of atoms. What fusion does is basically, and this is not scientific, but it's shooting two atoms together in the hopes that after shooting the atoms together, you're left with more energy than what you started. And if you can imagine what that means, it means you could theoretically have a perpetual source of energy that you create, and it creates more, the transaction, or not the transaction, the reaction. I used to be an engineer and I used to think about reactions in chemistry, but now I talk about transactions because I'm in finance. So to all my old engineer friends, I'm sorry, I've turned to the dark side. But in these reactions, it ends with more energy than which it started, which could be an incredible breakthrough. And this lab came out, 2-3 days ago and basically said, yo, we did that. We put it, I think it was like 1 gigawatts. It was some number, and it ended up being, they put in 1 unit of this and they got 1.2 out of it, which is pretty insane. Now, to piggyback off what you said, I'm skeptical. Even the announcement, if you actually start read a lot of the articles about fusion, I mean, they're very honest with, yo, we had to shoot 100 lasers at one thing. This isn't commercially available anytime soon. We're not all of a sudden going to be plugging into the fusion station. But I do find it interesting, and I'm going to venture a little bit into Stu's territory, conspiracy land. It's very interesting here how they wait until, or they come out with this announcement 2-3 weeks before year end, when typical budgets in the United States government are haggled over. And maybe there was some talk of, we're going to shut down researching fusion. I mean, it took the DOE to come out. I mean, there's a lot of other people investigating fusion, not just the DOE. Between me, you, and the fence post, I don't think the DOE is the smartest group of people out there. So I think they're coming to fusion before maybe some private sector geniuses? I'm going to go out on a limb and bet on the private sector. But it is interesting, Stu. And, obviously, I'm not saying what they're lying to us. I'm just, as you said, very unconvinced that this is anything more than a cool little science experiment. And if anything's going to move from this, it's going to be 50 plus years now.
And the article goes on and says, Michael, 50 cups of water burned in a fusion reactor match the energy of 2 tons of coal. That's pretty darn cool. But in the fission reactors, the uranium in 1/50th of a pound matches 1 ton of coal. The problem is the fission reactors does have nuclear waste. Here's the solution that is here now, Michael. Copenhagen Atomics. Copenhagen Atomics has thorium reactors. They're firing up in January, February, March. Okay, that's 3-4 months away, Michael. They're firing it up. And then in 2 years, within 2 to 3 years, they will be making a thorium reactor every day. They will be having a assembly line for these things. That's not 50 years down the road. And a thorium reactor uses nuclear waste from a fission reactor, and it uses that. That's here now. Why wait for 50 years and then spend billions upon trillions? And in the article, it looks like Adam West should be standing there in his Batman outfit. Anyway,
it does. It does. I'm always impressed with the images you find. So I think the point of it all, it's pretty cool. I'm not sure how much it means, and if anything, it's 50 plus years out, and this is most likely just going to continue to be a fun little science experiment. What's next?
Okay, this one falls along in that as well, and the number one delay of the U.S. moving to nuclear, and it's now kind of goes with the other article we have here in a little bit with ESG. Nuclear is now all of a sudden not that bad when people have to realize we need it. But we're not going to be able to put in nuclear reactors without having energy policies, and regulatory work change. We can barely get wells drilled. Yeah, you can get the lease, but they slow walk all the permits through. I want to share this with you. The article on this, Michael, is why permitting reform could help U.S. energy industry. Let me read this to you. The Hoover Dam, the largest concrete structure in the world at the time, was built in just 5 years. Yep. The 1,776-mile transcontinental railroad took 9. Okay.
Well, you have you have to mention this because along that note, at the peak, crews of the Central Pacific Railroad were laying 10 miles of track of day. Are you kidding me?
That's 10 miles a day. Now, look, we can't, in the regulations that are now coming out, and we are now in a position where the government is going to be legislation through regulations. The EPA is gearing up to adhere to new regulatory things that are being told to do by the White House. And some of those are good. Many of them are bad. And so all it does, we've had nuclear reactors that have been in the works for over 15 years that are just now coming to fruition because of permitting. Who thinks that we're going to get a nuclear fission reactor within 50 years? They're smoking something. I mean, cannabis is now legal.
Yeah, I know it's something harder than cannabis. They're probably onto the crystal, to be honest with you.
It's nuts. Anyway,
it's pretty nuts. And I think you, in my opinion, you hit the nail on the head with the idea of going forward, regulation will be,
legislation.
We're going to legislate through regulation. We're not going to outlaw it. We're just going to make it so difficult you give up.
Oh, yeah. So, all right. Now, last year and the year before, I wrote things about how they were sneaking in the bills, the big infrastructure bill. They snuck in that renewable, that natural gas and nuclear were considered green. It went right on into the infrastructure bill, and nobody really caught it. I think I was one of 3 people in the U.S. going, hey, green is in there. Natural gas is now green. And they really used it now to change the narrative. It was also in the EU. They had it in their items as well. Now, this article really comes out and says this is now becoming mainstream. The Ohio Green Natural Gas Bill, motivated by ESG investing concerns, the lawmaker says. What we're seeing, Michael, is that because of BlackRock, the articles yesterday that you didn't record, that the BlackRock at lost 1.7 trillion, $1.7 trillion dollars.
It's trillion.
Yeah, it was trillion in the first half of the year.
We should have started a little ESG scam.
Oh,
we
yeah.
would have made. Oh, we should have. Yeah. We missed out.
Oh, yeah. And because they're 8.9 trillion and they lost 1.7 trillion of ESG funds. So when you sit there and take a look, ESG investing has been good for the industry in many ways. It has gotten the governance section in oil and gas really brought into line, but we have swung way too far, and now it's going to take a little bit more, and it's going to cost the consumers more as it comes back in. Ohio State Mark Romanchuk, a Republican from Ontario, told the Energy News Network he hopes having green energy language in Ohio law may help large users of natural gas meet ESG standards. This language that is in this bill actually came from the infrastructure bill that was last year. And then that infrastructure bill language was put into the new adoption in the EU last year. So what we're seeing is Ohio is actually copying language that was put out. And Michael, it was done so that they could gradually change the narrative over a year and say, oh, well, we knew about it a year ago, and suddenly now that it's in print, it's okay. So you're going to see opening up of money to oil and gas because we're starving and we have the energy problems. I thought this whole trail of stories was pretty wild.
Yeah, I mean, it's unfortunately you've been right this whole time.
Yeah.
And I hate admitting that you were right, but
Yeah.
you called this like years ago. You
Yeah.
called this out in COP26. Nobody was talking about it, as you said. You aptly have pointed this out in Ohio, which we know what's going on there. So
it's kind of fun.
Unfortunately, we have to just sit here and clap, but we'll do that and get back to crying.
That's right. And I'm a legend in my own mind. Hey, I want to give a shout out to one of our fans, Paras and Sandy. Wish you guys a very happy holidays, Merry Christmas, and thank you for reaching out. We love our fans, and Paras was with us from the beginning, Michael, when it was just me and you trying to figure this show out. We got up to, oh, wow. So I love Paras, and thanks for listening to us all this time. My last article here is China's air travel. Okay. Look at this number here. They're starting to realize President Xi has got some real issues on. He'd better let people walk around or he's going to get thrown out. It's pretty simple. People are tired of him. So you can only put up with being shut in for so long. And look at the number, Michael, on that chart. The title of the article is China Air Travel Demand Soars as Zero COVID Eases. This translates into huge demand for jet fuel and oil. This is the single thing, Michael, that I'm looking for increased oil. It's not whether or not, I mean, you described it. We can't even predict pricing anymore off of old, tried and true methodology of supply and demand. This, however, is such demand that it does make a difference. And it is almost, I'm trying to read the chart, and it's like 400% increase in travel. It's unbelievable. And it's all of Asia, Michael, because when all the Chinese people want to go on vacation, they go all around Asia. So it is every country around in that area is going to need more jet fuel, more cars, more LNG, everything. And so this is going to be a big boon for energy prices coming around the corner. It's huge.
If you're a listener, I'd be frustrated because we were sitting on here 2 weeks ago telling you China's shut in and it'll never come back. I mean, it's my issue. It is crazy how in energy the momentum and the tide and the thought changes. I mean, 3 weeks ago, every article was China's shutting down, China's shutting down, China's shutting down. No one's going to be driving. No one's going to be driving. Oil's going to be $50. Now it's, IEA comes out today, which we'll cover in increases China demand. Exactly what Stu's talking about. They're looking at all this exact same data. And prices now rise. You can easily make a case that we see 80 and 4, and the fundamentals that I was making fun of last week for being broken are now back on. And now Goldman Sachs is stopping. Is still calling Stu, but now they've got at least a little bit more to back it up with. So,
yeah. Do you want to talk about this one last one with IR guy of the week?
Yeah, I mean.
I'm sorry, I am not a Jim Cramer fan. And I saw this article and I had to snag it for you because how many people did he throw? He lost people a lot of money by quoting some, what was some of that?
Well, here's my thing. So the title of the article is Jim Cramer says oil prices are set for a rebound. Yikes, that's not good. And he gives 3 oil stocks that could gain. I mean, I have nothing personally against Jim Cramer. The dude's a legend. Like, he basically started like the financial news game back in like the early 90s. He donates a lot of money to charity, but the dude is consistently wrong about everything. I mean, he was the famous, he was all in on Bear Stearns.
Yep.
You know, he was all in on Facebook. 3 weeks ago or a month ago, he was like, tearing up on camera, telling people he's sorry. He's like, I trusted the management team. And I mean, it was tough.
Now
2 years ago during COVID, he's 2 years ago during COVID, he said oil was dead. He told people oil was dead. And now the headline is Jim Cramer says oil prices are set for rebound. So, I mean, I'll give him, we do a daily oil and gas, or we do a daily energy show. Sorry, I put $1 in the jar. We do a daily show. So does Jim Cramer. I get it. At some point, you just run out of things to say and you just start rambling because you got to fill airspace. Dude's been on the air for like 30 years. So you're going to have some swings and misses. But it's just funny how consistently wrong he is. So I would be nervous if I was, seriously, not that I think he controls oil prices, but maybe oil prices will dip, considering that's what he thinks. But unfortunately, he's got 3 companies in his crosshairs. So, we don't give, if we were ever to give, we never give financial advice. Okay. But if we were, I'd short these guys. First off, Magnolia Oil and Gas. Don't know much about them. I mean, I know a lot about them. What am I saying? But their Eagleford play, big Austin chalk down here in South Texas, 260,000 or 23,000 acres, about 4,500,000 or about 450,000 acres in Giddens. They're doing about 81,000 barrel BOE a day. Profits are, everyone's revenue is up. Do I think they're going to crush it? I mean, they're only running 2 rigs in 2023. Oilfield service inflation now hitting at lower oil prices.
But how are they paying for those 2 rigs is my question.
Yeah, I don't know. Short them. That's all I'm saying. Next, Matador is just right. Next one is Matador Resources Company. I love these guys. They're literally not to give away my location, but they're 15 minutes south of where I'm chilling right now. They're primarily operated in the Delaware Basin, in West Texas. So there are a lot of oil. I like Matador. To be honest, I probably would buy Matador, but not anymore. Unfortunately, they've now made my sell list at the Permian Resources Corporation. I wonder if he knows anything about them and just someone passed him, hey, here's the list of 12 companies we like. And he's like, ooh, Permian. Let's just put that one in there because of the name. So IR guy of the year goes to whatever marketing company came up with Permian Resources Corporation. Because if there's ever a company that looks good in a press release, it's those guys. So I don't know if it's not really the IR team. It's probably some third-party consultant that they hired.
I think Jim should get IR guy of the year for this year, 2022.
Hedge fund manager of the month.
Yeah. Oh, there we go. We got to give him something.
We'll give him,
let's track these.
We know he doesn't need a tax deduction this year. We know that.
Oops. But what we will do is let's track these stocks. I'll put these in and we'll track them. Let's do the Cramer test on these.
Yeah, let's do the Cramer test. He's bullish on oil.
Magnolia, bullish on oil. I almost want to bet.
And Permian Resources Corporation. So
we're going to track them. We'll put the Cramer. Yeah, we're going to put the Cramer effect on
it. Anything else you've got?
I'm all back to you. Let's go to finance.
Yeah, it's, I think we'd be remiss if we didn't start just with the overall markets. S&P 500 drops about 0.6 of a percentage point. NASDAQ drops about 0.75 of a percentage point. And again, this is mainly due to Fed Chair Jerome Powell's confirmation of a 50 basis points increase of the targeted federal funds rate now sits between 4.25 percentage points and 4.5 percentage points. Again, that's target rate. So it doesn't mean every overnight borrowing is at that rate, but it's their targeted window. The part that really drove markets down, because if you're sitting there saying, well, Michael, why are markets down? Then we expected that. You told me last week. Market, or if it was a 50 basis points increase, nothing was going to happen. Well, true. What happened today was a reaction, and the reason why markets are down are a reaction to the fact that the targeted window was supposed to cap at about 5.1 percentage points. That's what analysts were expecting. Well, in his comments today, Fed Chair Jerome Powell came out and said, yeah, we're going to go past that. And so that doesn't bode well. Yes, we had a smaller interest rate increase, but unfortunately, that 5.1 target is probably going to be maybe 5.5, 5.7. And, you're only going to considering taking a hammer. We are above 4,000 on the S&P, so I wouldn't necessarily complain too much. But depending on some of the market factors going forward, I doubt we go much higher than 41, 4,200. On the crude oil side, I mean, it was a very, very interesting. It was an interesting day yesterday when the API came out with their 7.3 million barrel build when estimates were a 3.9 million barrel draw. That's a 10 million barrel swing. Well, the IE comes out yesterday, or as we record this today at about 6:45 p.m., IEA comes out and says, oh, it's actually a 10 million barrel build. Woo-hoo-hoo! But guess what oil prices, Stu, did? They took off like no other. As time stands, is like I said, 6:48 p.m. here on the night before here on December 14th. Oil's trading at 77.26 after being at around 75.20 before the date. We saw about $2.5 increase so far. And again, prices were eased. And why is that? Again, you've told me if IEA comes out and prints a build, it's not good for prices. Why did prices rise? Well, we covered most of it in the earlier section, but it has a lot to do with the China air travel stuff that we talked about. And really where those numbers are coming from was an IEA report that was out, which basically increased Chinese oil demand by over 400,000 barrels a day, which raised its 2022 oil demand growth estimate to 1.7 million barrels of oil today for a total of 101.6 million barrels per day in terms of global oil demand. That's high. That's a little bit high. That's above 100, which we had only seen a few times in the previous years. And during COVID, we dipped about 80. So we've basically gotten back to our original demand estimates. And with China now signaling they're going to need more oil.
Oh, it's huge. It is extremely huge.
That's where the fundamentals now come back into play a little bit.
Yes.
Obviously we've got fundamentals that aren't worried about U.S. oil storage, which maybe they should, maybe they shouldn't. But we've got fundamentals over on this side when we talk about long-term demand as prices rise. So good news on the oil demand side. It'll be very interesting to see how the supply side stays out. But for now,
supply side's tough, Michael.
And especially if it's the jet fuel we need.
Exactly, because there's a different blend that you got to have in order to do that.
Yep, it's unfortunate. On the natural gas side, guys, we're currently trading here about $6.50, $6.48. Pretty slow decline all day. We started above $7 and a drift down. Part of that is just the upward momentum stalls as we have some weather forecast turning a little bit more warmer, which obviously means we're not going to get as much tomorrow, or as you listen to this in the morning, we will see a natural gas storage print. Current NGI weekly storage estimate is a 41 BCF draw. The range is anywhere between 33 and 60 between all of the different analysts. Last year we had an injection of about 83 BCF. So it's going to be a little bit lighter on the injection side. So we see anything in that 60 to 80 range, expect markets to rip a little bit. But again, we're also balancing some weather forecasts. As we come into winter, it's going to happen. We're going to, one day it's going to be colder forecast. We're going to show up the next day. And now it's warmer. So we'll ride this wave out. Again, we're still looking for Freeport to come on in January, February, which will significantly increase prices domestically, as we will see a lot of our LNG to be shipped overseas.
One other thing, there was an article I just saw laid across my desk. They're afraid the Keystone Pipeline may be months coming back online. That is 600,000 barrels a day.
That's all the increase of Chinese oil demand right there. So who cares if they're increasing oil? Thank you to everybody and all the first responders who are out there helping with the Keystone Pipeline. We know it's you're an unsung part of the community, so we appreciate it and get that get that pipeline back in service. Both us and Canada really need it. So that's all I've got, Stu. Is there anything else? What should people be looking out for today?
Christmas holidays are coming up and people are selling off their losses here in the next few days. So be careful on how you bet the market. Listen to Cramer or not Cramer.
Well, you heard it there first, guys. So with that, we're going to let you get out of here, start your day, or get back to work. Thank you for checking us out here on the world's greatest podcast, the Energy Newsbeat Daily Stand-Up. For Stuart Turley, I'm Michael Tanner. We'll see you tomorrow. Today's episode of the Energy Newsbeat podcast is brought to you by Enverus. The energy industry faces massive challenges every day, and the events over the last 2 years have caused huge disruptions like never before. Companies in the energy industry need actionable intelligence and a single source of truth that brings all the data together. Enverus is the energy specialized technology partner that provides intelligent connections for a global energy ecosystem. Only Enverus has the analytics, people, experience, and industry scope to connect the right data and information in the right way to discover missed opportunities and deliver fast outcomes. Find out more at Enverus.com. That's ENVERUS.com.